Hey everybody, Chuck Barone. Tuesday, March the 28th, 2023. Rounding into another week in these markets. Lots of interesting stuff going on. This is just a fascinating time to be watching these markets, to be alive right now. History happening while we're living it, guys. Really something else. But anyway, before we start the show, as always, want to thank everybody for your support. Welcome you to the show. We appreciate you guys. We really do. Markets today. Well, markets kind of just, I think we're waiting on data coming later this week, starting tomorrow. So the market's kind of just holding its breath here. Stock market today down small, not much happening in the markets, small volume. The Dow down 37, S&P down 6, NASDAQ drops 52. It's been really hot, so it figures if it was going to correct, it would be a little more than the other ones. Not much to really say in the markets, not a lot of news. Market breathing a little bit of a sigh of relief. Not a lot of bad news, or I guess no bad news coming from banking today, even though I got my doubts about that whole thing. So the market is kind of moving sideways, a little negative bias. Bonds also not much today. Yields rising again. The 10-year up 4 basis points at 3.56%. The 2-year jumps 11 basis points to 4.08%. So, here we sit, this bond market, big rally, rates plummeting, down 108 basis points in like 10 trading days, just the craziest ever. Now coming right back up. The market there's just no direction to this market right now. It's all being driven by what's the latest news of the day. And there's been so many shocks to the system. Now I'm waiting to hear on this geopolitical stuff. I really think that's going to ultimately be the one. This Ukraine, Russia, China, all this stuff over there. Not a good feeling for me. So I think rates are probably going to be spiking higher. 4.5% on a money market, man. Some friends of mine just got a JP Morgan money market, 4.5%. Nice, complete liquidity. Granted, the inflation rate is higher. But nonetheless, that's a nice rate with no risk. Dollar today, not much in the dollar, down very small, 102.41 on the index, basically just hanging around. Metals today, a small rally for metals. Gold up $16, $1,972.30, 2,000 gold coming. Silver up 24 cents, $23.30, $25 silver coming soon. Oil today, another update for oil, so we're going to start re-looking at this a little bit. Up 54 cents today, $73.35, moving further away from that 70, which has been resistance for oil. Now it looks like it's going to round its way back up to 75. We'll see where it goes and when it starts to run out of steam. Bitcoin today up small, $360, 27,335. Bitcoin is hanging on, man. It's doing good. In spite of the bad news in the markets, the bad news in cryptos in general, and all kind of stuff. Binance on the cover of the Wall Street Journal this morning. Bitcoin hanging in there. It's pretty impressive. News you guys need today? Not a lot today, guys. Well, we knew consumer confidence was coming today. It came out. Looks like consumer confidence on the rise. The index rises slightly to 104.0 or 104.2. That's up from 103.4 last month, so just under a 1 point gain. The Wall Street Journal poll of economists had expected the index to come in at 100.7, so they were expecting a pretty nice decline. Instead, got a little bit of a gain. Consumer confidence. Consumers feel okay about the economy because the job market's hot. A little more concerned about mortgage rates. They actually see mortgage rates going into the 8s, which is a big surprise. A little more concerned about inflation, which they see hovering in the 6s. So it's going to be interesting to see how all of this turns out and how long consumers can keep this, happy kind of things are okay vibe going while we see their levels of debt going up, their levels of savings going down. Nothing lasts forever, right? And the truth is, 104.2 on the index is hardly a number that's considered healthy for the economy. You're looking in the 120s, 130s for an economy that's going, 150s if it's really sizzling and everybody's feeling good about things, right? So that number, meh, not much. TikTok today, I want to talk about this TikTok scam because I got to laugh about this. So you got all the Congress critters up there roasting this poor Chinese guy from TikTok. So it looks like they're determined. I don't really think it has anything to do with TikTok themselves, but they're after the Chinese. So they're going to probably ban TikTok or force a sale to American interests. It looks like that's more likely. But I just laugh at this stuff. So TikTok, they're worried that TikTok's data mining, they're getting sensitive data that somehow the Chinese government is going to use to exploit Americans or exploit America. So now I laugh when I hear this stuff, right? It's like, do they think we're just, they do. They think we're morons. They really do. Because my question then would be, what about every other foreign country or internet website? You know, I mean, do you really believe that they're all benign? That China might not have a piece of one that's registered in Belgium? I mean, this is just silliness, man. And not only that, this whole data mining idea, we're the creators of that. American companies are the kings of that, exploiting that, man. Hello Meta, hello Google, hello all of these companies. So, I mean, I just crack up that somehow this one is a big national security threat, but Amazon, knowing literally everything you do, everything you say, they're listening to you on your phone, they're watching you, they know everything you buy, they know how you spend your money, they know where your money is, they know how much money you have. All that's all good because that's, American commerce, but holy crap, TikTok could be the end of the world, guys. It's just the silliest friggin' thing ever. I think it might be time for, the people's privacy rights to kind of come back up to the forefront here. Like, people are more important than corporations, man, and people's rights are more important than corporations mining data to send you a piece of advertising on your Facebook feed. Anyway, this just seems to me like a big tempest in a teapot. It's typical distractive bullshit where it's look over here while all these problems over here get worse. We're arguing about TikTok. Okay, genius. SVC, or SVB, Silicon Valley Bank, knuckleheads also on Capitol Hill today. Federal Reserve talking about it. So apparently now, the Silicon Valley Bank thing was just all bad management. It was the managers weren't paying attention. They weren't. They were, they had bad risk management. They didn't have a risk management officer. It wasn't. So it was all on them, Interestingly, it wasn't the fact that they exempted them from Dodd-Frank. And it wasn't that they exempted them from the stringent safeguards Dodd-Frank brings, right? Reserve requirements, stress tests, and all the stuff that goes with being a healthy bank. That had nothing to do with it. No. It's this incompetent guy over here that didn't realize the Fed was going to raise interest rates 4.5 points in a year, and that he was going to get clocked with collapsing collateral, and that I'm sure everybody could foresee $142 billion in withdrawals in 2 days. Can you stand this? $42 billion in 1 day. I thought that was a miracle. Wow, how the hell do you get $42 billion in withdrawal requests in 1 day? Hey, guess what? The next day was $100 billion. So literally everybody that had money in Silicon Valley Bank was trying to withdraw it all at the same time. Okay, that wasn't because of deregulation. It wasn't because of crap policy, right? California, U.S. government. It's all because this poor incompetent guy that's probably going to end up getting stripped of all of his wealth and end up in jail as the scapegoat for all the rest of this crap. Just hilarious, man. Another interesting stuff I was reading today. So I guess, we know commercial real estate is having it really, really, really bad right now. Residential real estate really falling. But commercial real estate having it even worse with this now work from home trend where people don't even want to go back. People are refusing to go back to the office. They're refusing these long commutes. So that's hurting commercial real estate. What I'm reading, there's a lot of vacancies and nobody wants to rent, and if they do, they want super reduced rates. But now I'm reading that regional banks, which are Silicon Valley Bank, Signature Bank, banks of that nature, provide 80% of the funding for commercial real estate, purchase, sales, redos, whatevers, equity lines, I'm guessing, or who knows, whatever. But 80% of the funding for commercial real estate comes from a banking sector that's pulling its horns in, man. It's only going to make things way, way, way worse for commercial real estate. So if you're holding commercial real estate, be very, very cautious. If you have your place leased out, count your blessings. It's a $20 trillion market on the verge of collapse. If that one goes down, man, that is going to be very, very, very painful to our banking system. Hopefully, we know there's a decline. We know it's declining. We know there's pressure. Hopefully, it won't end in a total collapse. And finally, after we finish the show today, I'm going to get with Jake here to put up the investment thing I did. I'm just going straight into the Fidelity S&P 500 Index Fund, buying it at yesterday's closing price, which today's price, if you were buying it, would be $138.48 per share. I'm going to start with $5,000 in shares. I picked a mutual fund because you can buy fractional shares, so you can use round numbers. So $5,000, it's a $10,000 theoretical investment. $5,000 in a fund, $5,000 in a money market, and I'm only going to have the money market paying 3% interest, so nobody can accuse me of cheating by creating a rate in the money market higher than market rates. So that'll be up on the website by around this time tomorrow, I would guess. So keep an eye on that. Now, it's not going to be something you're going to want to look at every day. It's not going to be a big trading thing where I'm trading in this. My trades will be pretty much once a month around the beginning of the month. We're going to make a decision on buy, sell, or hold. Do we want to hold this position where it is? Do we want to add to the position? Do we want to reduce our position? We're in profit. I'll show you guys this system. It's very simple to use, and it's very, very, very tough to beat. Anyway, that's it for the day, guys. Big data coming tomorrow. We know we're going to get GDP numbers tomorrow. We already know where that's going, but hopefully, that's going to be interesting to see how they calculate the yearly GDP out. And then we know Thursday and Friday are big days coming. Until then, guys, take care of yourselves and each other. Remember the sage advice we've been giving you guys. I wish I could claim credit for thinking any of this stuff up, but I can't. But it's simple. Same mantra as always. Save as much money as you can. Your target is 10% of your income. Don't add on an additional debt. If you have debt already, try to do what you can. Pay it down a little at a time. Even if it's $10 extra on the principal, pay that extra. Spend your money wisely, thoughtfully. Beware of impulse buys, and invest your money conservatively. This is not a time right now to be shooting for big gains. This market is just wild and all over the place. This is a time to preserve your capital, preserve the money you have, because there's going to be a better time to invest it where you're going to have more certain and better returns. Anyway, guys, we appreciate your support. Get out there, hit us. If you appreciate the video, hit the like button, share it with your friends. As always, ask your questions in the comments section. Your comments mean the world to us, guys. We'll be back again tomorrow to bring you guys up to date. Until then, take care. Thanks.